We had some huge news for stock market investors as President Donald Trump said that the threatened tariffs on China are not sustainable. So I'm going to go over the details of this announcement and what it can mean for stock market investors, because the tariffs and the increasing trade barriers I see as one of the biggest risks to the stock market. And the trade barriers against China is the most volatile, the region that's being under the highest percentage increase in tariffs. So it's really important for all stock market investors to evaluate the impacts and the decisions surrounding these trade barriers. All right, so President Donald Trump said that the high threatened tariffs with China were not viable as tensions between the two largest economies intensified last week. Remember, China instituted new barriers, new restrictions requiring businesses to ask for licenses before certain commodities could be exported, so rare earths as they're being called. And then the United States retaliated by increasing or threatening to increase the tariff against imports from China by another 100% effective November 1st. That's the number that President Donald Trump is alluding to when saying that this number is not sustainable. Trump said in an interview with Fox Business, when asked whether the levies he has threatened to impose on China could remain in place without significantly affecting the economy. But that's what the number is. It's probably not, it could stand, but they forced me to do that, he added. So the president saying that the number is not sustainable, but that's the number where it is. And I think this is part of President Donald Trump's strategy in instituting these tariffs, especially against China, is the volatility, the uncertainty, the vagueness, the up and down. Maybe it is, maybe it isn't. Maybe next week I change my mind. Maybe I don't. Maybe I'll increase it by 500%. Maybe I'll decrease it. Maybe I'll do this. Maybe I'll do that. That's part of the strategy. And while the strategy is aimed at, while the strategy may appear to be aimed at China, the strategy may also be aimed at U.S. businesses in giving them more reason to stop importing products from China. Because if the number, let's say, as it stands, it's roughly 55%, the effective tariff rate against Chinese business, click the link below to watch the full video.